In the previous video, we have discussed these 2 points. The first one is schedule of changes in working capital. Okay, the schedule of changes in working capital deals with current assets and current liability. The second one is fund from operation. Fund from operation deals with non-operating income and non-operating expense that we have already discussed in the previous video. The last one is fund flow statement. See, the fund flow statement deals with sources of funds and applications of fund. It is just like a inflow of fund and outflow of fund. It is a movement of fund. So what are the different sources available to raise fund for the organization is called sources. In what way we are spending the money, what are the applications is called application of fund, that is inflow of fund, and outflow of fund is called fund flow statement. Okay, so now let us see fund flow statement with the help of comprehensive problem. This is the format of fund flow statement. First one, you have to write the different sources of fund. So these are the examples of sources of fund for the organization. Say, issue of shares. Okay, by way of issuing shares, company can raise fund from the public. It is also one of the main sources of fund. Next one, issue of debentures or issue of bonds, also one of the sources of fund. Then long-term borrowings, that is a long-term loan from bank or any other third parties is called long-term borrowings. So it is also one of the sources of fund for the organization. Next one, sale of any fixed asset and sale of investment. So when they sell any asset or when they sell investment, cash comes in, that is inflow of fund. And the next one is funds from operation. In the previous video, we have discussed about the fund from operation. It is a main sources of fund, that is internal sources of fund. Next one, application of funds. Application of fund means it's just like a outflow of fund. In what way, how the fund is going out, what purpose. So what are the different forms of application that will be listed out under this heading. The first one is redemption of preference shares. See, at the time of issuing shares, they can raise fund from the public. So it is a main sources of fund. But at the time of redemption of preference shares, you need to repay the money to shareholder which you have acquired from the shareholder. So this is called application of fund. So redemption of preference share is nothing but repayment of amount to preference shareholders. Redemption of debenture means that is you already acquired fund from the debenture holder by way of issuing debentures. When you repay amount to debenture holder, it is one of the form of application, that is outflow of fund. Repayment of long-term loan. When you acquire loan from bank, it is a sources of fund. When you repay that amount, is called as application of fund, that is outflow of fund. Then purchase of fixed asset. When you acquire fixed asset, cash goes out. Purchase of investment. So at the time of purchasing a new investment, cash goes out. It is also one of the application of fund. Then payment of dividend. So when you make any provision, it is a current liability. But when you pay dividend or when you declare dividend to shareholder, it is an outflow of fund. This will be recorded in this heading. Then payment of tax. It is the outflow of fund. This will be recorded in the application of funds. Then fund lost in operation. So there is a possibility of getting fund from operation or fund lost in operation. If it is a positive value means that will be recorded here, that is funds from operation. If you get negative value means that will be recorded here, fund lost in operation. Okay, then find the total application. Then you can find the difference, that is sources, total sources minus total application is equal to increase or decrease in working capital. If your sources amount is excess than the application means that amount will be called as increase in working capital. If your application is more than the sources means that amount will be called as decrease in working capital. So according to the answer, you can write here either increase in working capital or decrease in working capital. Look at this comprehensive problem. With the help of this problem, I am going to explain how to prepare schedule of changes in working capital, fund from operation, and finally fund flow statement with some adjustment. For each and every adjustment, you need to prepare a separate ledger. Okay, I'll explain you in detail. Just see this problem. From the following balance sheet of Prakash Limited, make out the schedule of changes in working capital and a statement of sources and application of funds. So 2 years balance sheet is given. Goodwill, land, machinery, investment, data, stock, bills receivable, cash in hand, cash at bank, preliminary expense. For 2 years information is given. Look at the liability side. Equity share capital, redeemable preference shares, capital reserve, general reserve, profit and loss account, proposed dividend, creditors, bills payable, liabilities for expense, that is outstanding expense, provision for taxation. Look at the adjustment. Additional information. First one, a machine has been sold for 10,000. The written down value of the machine was 12,000. So on that day, the written down value of machinery was 12,000 but sold for 10,000. What is the difference? 2,000. The 2,000 is called loss on sale of machinery. So that will be recorded in the machinery account separately. You need to prepare separate ledger for this transaction. Depreciation of 10,000 is charged on machinery in the year 2014. So this is the new depreciation for the current year. Look at the next one. A piece of land had been sold out in 2014 and the profit on sale has been credited to capital reserve. See, they didn't mention about the selling price of land, but they have given the profit amount which is credited to capital reserve. Look at the balance sheet liability side. Capital reserve. Last year nil balance, current year 20,000. This 20,000 is credited to capital reserve. This amount is profit on sale of land. Okay, so for this you need to prepare a separate ledger. Look at the last adjustment. An interim dividend of rupees 20,000 has been paid in 2014. So it is one of the form of application of fund. So when you declare dividend, cash goes out. That is outflow of cash. So this will be recorded in two places. One is while you prepare the fund from operation, you need to add along with the net profit. Why? Because it is a non-operating transaction. So this will be added back with the net profit, and the same thing will be shown under fund flow statement under the heading of outflow of fund, that is application of fund. Let us see the first one, schedule of changes in working capital. The schedule of changes in working capital deals with only current asset and current liability. Just mark what are the current assets given in the balance sheet. Goodwill is a non-current asset, land also non-current asset, machinery non-current, investment non-current, debtors current asset, stock current asset, bills receivable current asset, cash in hand current asset, cash at bank also current asset, preliminary expenses, it's a non-current asset. Okay, so these are the current asset we need to record in the schedule of changes in working capital. Look at the liability side. Equity, non-current liability, preference also non-current liability, capital reserve, general reserve, profit and loss account. So these are all non-current liabilities. Proposed dividend and provision for taxation can be considered as current liability or non-current liability. Okay, so if we consider this item as a current liability means this will be recorded only in schedule of changes in working capital. That's all. Again, you need not show anywhere. If we consider this as a non-current liability means then it will be not recorded in schedule of changes in working capital. In such case, this will be recorded in two places. One is fund from operation and the final one, fund flow statement. In that case, the last year amount will be considered as paid. This amount is declared paid, and current year amount will be considered as a provision made for dividend. In such case, current year amount will be recorded in fund from operation. Last year amount will be recorded in outflow of fund, that is application of fund. Okay, this is the two different types of treatment. Okay, so we can consider either current liability or non-current liability. For your understanding, I am going to consider this as a non-current liability and this I am going to consider as a current liability so that you can able to understand two accounting treatment. Creditors, current liability. Bills payable, current liability. Liabilities for expenses means outstanding expenses, also current liability. Provision for taxation. For your understanding, I am going to consider this as a current liability. Now let us prepare the schedule of changes in working capital. Schedule of changes in working capital. This is the format. Particular column you need to write current assets and current liability. Two columns are there to record data for last year and current year, and here you need to record changes in working capital. I already explained the logic. When current asset increase, working capital also will increase. When current asset decrease, working capital also will decrease. For current liability, just opposite. When current liability increase, working capital will decrease. When current liability decrease, working capital will increase. Just opposite direction. This is a simple logic. With this you can prepare schedule of changes in working capital. List out all current assets and current liabilities. Debtors, last year 1,50,000, current year 1,80,000. Debtors, stock, bills receivable, cash in hand, cash at bank. These are all the current assets. Now I am going to write current liabilities. Creditors 25,000, 50,000, bills payable 10,000, 6,000, liabilities for expenses 23,000 and 6,000, provision for taxation 20,000, 25,000. Creditors 25,000, 50,000, bills payable, liabilities for expenses, provision for taxation. Now you need to find the changes in working capital with the help of that simple logic. Debtors. In the first year, 1,50,000. Next year, 1,80,000. What is the difference? It increased from 1,50,000 to 1,80,000. So when current asset increase, working capital also increase. 30,000 increased. Next, stock 70,000 first year. Next year 1,00,000. What is the difference? 30,000 increased. So working capital also increased. Next, bills receivable. First year 20,000, next year 30,000. So what is the impact? Increased 10,000. So working capital also increased. Then cash in hand. So last year 15,000, this year 10,000. What is the difference? 5,000 difference. That is decreased from 15 to 10,000. So decrease. When current asset decrease, working capital also decreased. 5,000. Next, cash at bank. First year 10,000, next year 7,000. Same thing, decreased. How much? 3,000. So working capital also decreased. In the same way, find out the changes in working capital for liabilities also. So first year 25,000, next year 50,000 increased. When current liability increase, working capital will decrease. How much? 25,000. Then bills payable. First year 10,000, second year 6,000 decreased. See, when current liability decrease, working capital will increase. How much? 4,000 increased. Then liabilities for expenses, that is outstanding expenses. First year 23,000, second year 6,000 decreased. When current liability decrease, working capital will increase. 17,000 increased. Provision for taxation. In the year 2013, 20,000. In the year 2014, 25,000. 5,000 increased, So working capital will decrease. How much? 5,000. So this is the way to find out the changes in working capital. Now get the total for each column. This is total current asset. A. 2,65,000. 3,27,000. In the same way, find the total for liabilities also. Total liability 78,000. For 2014, 87,000. Okay, so this is the total current asset for 2013 and 2014. This is the current liability for 2013 and 2014. Now you need to find the net working capital. What is the formula for net working capital? Current asset minus current liability. Total current asset minus current liability is called net working capital. 2,65,000 minus 78,000. What is the total? 1,87,000. In the same way for 2014 also. Total current asset 3,27,000 and total current liability 87,000. 327 minus 87. 2,40,000. Okay, now get the balance. So which side is highest value? 2014 is higher than the 2013. Put this value 2,40,000 and enter the same amount for first year also 2,40,000. So what is the difference here? You will get the balancing figure. How much? What is the balancing figure here? 53,000. The current year working capital is more than the last year working capital. That is, it increased. How much increased? 53,000 increase in working capital. So in the first year working capital amount is 1,87,000. But for the current year 2,40,000. It increased from 187 to 240. What is the difference? How much amount increased? 53,000. This is increase in working capital. This is the final answer. You can find the same answer here also. The total for increase column 30 plus 30 60 plus 10 70 74 74 plus 91,000. Same amount you can write here also 91,000. Just find the total for decrease column 5 plus 3 8,000 8,000 plus 25 plus 5,000. Total 38,000. So decrease column we have only 38,000. But what is the total increase? 91,000 increased. So increase in working capital is 91,000. But decrease in working capital how much? 38,000. What is the difference? 53,000 difference. That is, this amount is called increase in working capital. So increase in working capital is more than the decrease in working capital. The final answer is 53,000 is increase in working capital. This amount you will be getting while you prepare the fund flow statement. So fund flow statement means total sources of fund minus total application of fund is equal to increase in working capital. Your final answer will be 53,000. So far we have discussed schedule of changes in working capital. We have got the answer, that is 53,000 is a increase in working capital. Next one is we need to prepare sources and application of fund. So before we prepare this, we need to work out and we need to show some working notes. Then only we can able to prepare the fund flow statement finally. We need to prepare separate ledger for this adjustment. For the first adjustment, we need to prepare machinery account. See, a machinery has been sold for 10,000 and the written down value of the machine was 12,000. And current year depreciation how much? 10,000. So what is the opening and closing value of machinery account? Look at the balance sheet. Machinery account opening balance 50,000, closing balance 1,50,000. In machinery account ledger, debit side, to balance brought down. That is opening balance how much? 50,000. Closing balance how much? 1,50,000. No. So opposite side. By balance carry down 1,50,000. So this is opening balance 50,000. Closing balance 1,50,000. Now look at the adjustment. A machine has been sold for 10,000. That will be recorded in credit side of machinery account. So when you purchase machinery, that will be recorded debit side. When you sell machinery, that will be recorded credit side. Okay, buy cash. How much? That is sale. Sale of machinery. How much? You have sold for 10,000. Now you need to record the profit on sale or loss on sale of that particular machine. So that information is given in the adjustment itself. The machinery sold for 10,000 but the WDV value, that is written down value of machinery, was 12,000. The actual value as on the date of sale is 12,000 but they have sold for 10,000. What is the difference? 2,000 difference. The 2,000 is loss on sale of machinery. That will be recorded credit side of machinery account by profit and loss account. Within the bracket, loss on sale. How much? 2,000. They have sold 12,000 rupees value of machine for 10,000. The 2,000 is a loss on sale that will be transferred to P&L account. Apart from that, depreciation of 10,000 is charged on machinery in the year 2014. So this is the current year depreciation. The depreciation will be recorded credit side of machinery account by profit and loss account within the bracket depreciation. How much? 10,000. Now get the total. Credit side 1,50,000 plus 10 plus 2 plus 10. What is the total? 1,72,000. Same thing you can write here also. 1,72,000. Debit side we have only 50,000. What is the difference? 1,22,000 to cash. That is purchase. When you prepare machinery account, if both opening balance and closing balance is given means you won't be getting any balancing figure. If you get any balancing figure, either debit side or credit side means it will be considered as either purchase or sale of asset. According to this problem, we have got debit side balancing figure. So, if there is any debit side balance, it will be considered as a purchase of asset. So, to cash purchase balancing figure. If we get any balancing figure in this side means it will be considered as a sale of machinery. This will be recorded in application of fund. Why? Because when you purchase machinery or when you purchase any asset, cash goes out. That is outflow of cash, which means application of fund. And look at this side. The loss on sale of machinery 2,000 and 10,000 depreciation. These are the two items will be added back along with the net profit while you calculate the fund from operation. Why? Because loss on sale is a non-trading loss. Okay. And the depreciation is a paper transaction. That is, these are the two items which is not going to decrease fund from the operation. So, these items can be added along with the net profit to find out the fund from operation. And look at this amount, the sale of machinery. This amount is the sources of fund. This will be recorded in the inflow of fund. So, while you prepare the fund flow statement, this will be recorded in sources of fund. This will be recorded in application. This will be recorded in sources. These are the two items will be recorded in fund from operation. The next one is the proposed dividend. I told you the proposed dividend can be considered as current liability or non-current liability. For your understanding, I have taken this as a non-current liability. In such case, you need to make a separate ledger for this. What is the opening value? 42,000. Closing value 50,000. Proposed dividend account. It's a liability. Start with credit side. By balance brought down. That is opening value how much? 42,000. Closing value debit side. To balance carry down. How much? 50,000. The opening balance will be considered as a last year you have made provision to declare dividend. Current year you have paid this amount, declared this amount. When you pay proposed dividend to shareholder, what is the entry? Proposed dividend accounted to cash. Proposed dividend accounted to cash. That is paid. How much? 42,000. Last year you have made provision. This year you have paid. And what is this? This amount you have made provision for current year. Okay. So, if any provision made during this year, that will be recorded credit side by profit and loss account. That is, you have made provision for dividend. Proposed dividend. How much? 50,000. Now, get the total. 92,000. 92,000. There will be no balancing figure in this account. Why? Because we have considered this amount as paid and this amount as provision for current year. Okay, now this will be recorded in application of fund. This will be recorded in fund from operation. Look at the next adjustment. A piece of land had been sold out in 2014 and the profit on sale has been credited to capital reserve. Okay, you need to prepare a separate ledger for land account. Look at the balance sheet. Land value how much? In the year 2013, 1 lakh. 2014, 70,000. This is opening balance. This one is closing balance. Land is an asset, no? So asset always showing debit balance. So to balance, opening balance. Brought down how much? 1 lakh. Closing balance opposite side. By balance, carry down 70,000. In this adjustment, they didn't mention about the selling price of land, but they clearly mentioned that the profit on sale has been credited to capital reserve. Look at the liability side. Capital reserve, how much? 20,000. This is the amount which is profit on sale of land. This will be recorded in land account. In land account, debit side to capital reserve. Within the bracket, profit on sale. How much? 20,000. Now find the total. 1,20,000. Here also 1,20,000. What is the balancing figure here? 50,000. When you prepare any asset, if opening and closing is there means the balancing figure will be either purchase or sale. Okay, according to this problem, here we have got balancing figure, that is cash, sale. How much? 50,000. Here we have got 50,000 in credit balance, no? So this will be considered as a sale of asset. Balancing figure. Okay, this will be recorded in sources of fund because sale. When you sell any asset, cash comes in. That is sources of fund. See, this 20,000 profit on sale, if this amount is transferred to profit and loss account, then it will be taken into consideration for fund from operation. But according to this problem, this 20,000 is transferred to capital reserve, which means the profit on sale is already included in the selling price. So this amount we are going to record in inflow of fund, that is sources of fund. So again, you need not show this amount anywhere. Look at the last one. An interim dividend of rupees 20,000 has been paid in the year 2014. See, you need not prepare ledger for this. Why? Because we didn't have opening and closing balance for this transaction. So, we cannot able to prepare the ledger for this transaction. So, simply you can record this amount in two places. One is application of fund, because when you declare dividend, interim dividend paid, when you pay dividend, it will lead to decrease our fund, that is outflow of fund. This will be recorded in application of fund. The same amount will be recorded in the fund from operation because it is a paper transfer. This will be taken from the net profit. So this will be added back along with the net profit. Now let us see how to find out fund from operation. See, the fund from operation can be calculated in two different methods. One is a statement method, another one is adjusted profit and loss account method. Okay, so in the previous video I have explained two methods, but now I am going to work out in the statement method. So according to the statement method, you have to start with closing net profit. See, look at the balance sheet, profit and loss account. 30,000, 40,000. This is opening balance. This one is closing balance. You have to start with closing balance. Closing net profit. How much? 40,000. Now, you need to add non-fund or non-operating expenses which is debited in P&L account, that will be added along with the net profit. In this problem, we didn't have the profit and loss account. If the profit and loss account is not there, means we can find the non-operating transactions from the balance sheet itself. Look at the balance sheet. We have current and non-current assets. No, just leave current asset. Why? Because we have already taken into consideration for changes in working capital. Now we have to focus only non-current asset. Goodwill is a non-current asset. Just see the difference. Last year 1 lakh, current year 70,000. What is the difference? 30,000 written off. So goodwill written off is a non-operating expense. Goodwill written off. How much? 30,000. 1 lakh minus 70,000. 30,000. It's a non-operating expense. For land, see, for land we have already prepared the ledger. Just refer the ledger. Look at the land account. Here opening balance, closing balance is there. Here we have got balancing figure 50,000. This will be recorded in sources of fund. And this 20,000 is already included in this 50,000. So we need not record anything in the fund from operation. Okay, next one. machinery account. So for machinery account also we have to refer the ledger. Look at the machinery account. Opening balance, closing balance is there. Credit side, cash, that is the sale of asset. Now this will be recorded in sources of fund. See, the second one is a profit and loss account, that is loss on sale of machinery. This is a non-operating transaction, that is a paper transaction. So this will be recorded in fund from operation. And the same thing, 10,000 also depreciation. No, it is a non-fund transaction. These are the two things will be recorded in fund from operation. Loss on sale of machine. How much? 2,000. And depreciation. How much? 10,000. So next one is investment. So investment, opening balance 10,000, closing balance 20,000. Nothing is given in the adjustment regarding investment. So what is the difference? 10 and 20 increased. How much amount is increased? From 10 to 20. No, 10,000 increased, which means purchase of investment. So the purchase of investment will be recorded in the application of fund. Why? Because if there is any inflow of fund and outflow of fund, that will be recorded in fund flow statement. So this will be recorded in fund flow statement. And look at the last one. Preliminary expense. So preliminary expense also non-current asset. So last year 15,000, this year 10,000, decreased from 15 to 10,000, which means preliminary expense written off. So this is a non-operating transaction. No, this will be recorded in the fund from operation. Preliminary expense written off. 15,000 minus 10,000. Balance 5,000. See, general reserve. Just find the difference of any reserve. See, general reserve last year 40,000, current year 50,000. 10,000 increased. The 10,000 general reserve is transferred from net profit. So, this amount is not going to reduce the fund. It is a paper transfer only. That will be added back along with the net profit to find out the fund from operation. General reserve transfer. How much? 10,000. Next, proposed dividend. See, the proposed dividend, I told you, no, this can be considered as a current liability or non-current liability. For your understanding, I have taken this as a non-current liability. So, in such case, the opening amount will be considered as a paid, and this amount will be considered as a provisions made for the current year. So any provisions made, that will be made out of net profit only. No, so it is also paper transfer. So this will be added back along with the net profit. How much? 50,000. Proposed dividend. How much? 50,000. Provisions made. It is a paper transfer. So this will be added back along with the net profit. Look at the last adjustment. An interim dividend of 20,000 has been paid. This will be recorded in two places. One is fund from operation and application of fund. Interim dividend. How much? 20,000. Now find the total and add along with the net profit, closing net profit. 1,27,000. Add along with 40,000. What is the total? 1,67,000. Now subtract non-fund or non-operating income if any. So according to this problem, there is no non-operating income. Just put dash. And finally, you need to subtract opening net profit. So you have started with closing net profit. No. Closing net profit how much? 40,000. Now you have to subtract opening net profit. Opening net profit how much? 30,000. 30,000. What is the balance? 1,37,000. This is fund from operation. If we get negative value means that will be considered as a fund lost in operation. But here we have got plus value. No, this is called as fund from operation. We have started with closing net profit and added all non-fund and non-operating expenses and subtracted opening net profit. The final answer is fund from operation. This will be recorded in sources of fund. This is the main sources, internal sources of fund. Finally, we need to prepare fund flow statement for the year 2014. Particular column, 2 columns to record the amount. And a particular column, first one, sources. Sources means inflow of fund. Okay, the first sources of fund is fund from operation. Look at the fund from operation. We have got 1,37,000. No, this is the internal sources of fund. This is the main sources of fund for the organization. Fund from operation, how much? 1,37,000. Now look at the machinery account ledger. So here sale of machinery, how much? 10,000. So it is also one of the sources of fund. This will be recorded in sources and this will be recorded in application. Sale of machinery, how much? 10,000. In proposed dividend, we have paid 42,000. No, this will be recorded in application of fund. Look at the land account ledger. In land account also we have balancing figure 50,000 as sale of land. How much? 50,000. This will be recorded in sources of fund. Sale of land, how much? 50,000. Look at the liability side, equity. So equity shares also, it is also one of the sources of fund. Just see, last year 2 lakhs, current year 3 lakhs. So how much difference? 1 lakh increased, which means issue of shares. They have raised 1 lakh rupees by way of issue of equity shares. It is also one of the sources of fund. Issue of equity shares, 1 lakh. Okay, so now look at the next one. Redeemable preference shares. Last year 1,50,000, this year 1 lakh. Reduced, which means what is the difference? 50,000 difference. No, last year 1,50,000, current year 1 lakh. What is the impact? The 50,000 is repaid or redeemed. Okay, so redeemed means outflow of fund. This will be recorded in application. That is outflow. This one is inflow. Redemption of preference shares. How much? 50,000. Redemption of preference shares. How much? 50,000. Next one, capital reserve. This capital reserve last year 0, but last year nil, current year 20,000. This amount is already included in the sale of land. So again you need not show this anywhere. Okay, we have already recorded land, no, sale of land, no. That amount is included in that value. So in this 50,000, the 20,000 also included. Look at the machinery account here, 1,22,000. That is purchase of machinery. This will be recorded in application. Purchase of machinery, how much? 1,22,000. Look at the next ledger, that is the proposed dividend. Debit side 42,000 is there now, that is paid. So any amount paid, it's an outflow of fund. No, this will be recorded in application of fund. That is outflow of fund. Proposed dividend paid. How much? 42,000. Look at the investment. I already explained, investment amount is increased from 10 to 20,000. What is the difference? 10,000, which means purchase of investment. It is an application of fund. Purchase of investment. How much? 10,000. Look at the last adjustment. Interim dividend 20,000. I already explained, this will be recorded in 2 places. One is fund from operation and application of fund. Why? Because it is an outflow of fund. Interim dividend paid 20,000. Now get the total. What is the total sources? 137 plus 10 plus 50 plus 1 lakh. Total 2,97,000. And find the total of application. 50 plus 122 plus 42 plus 10 plus 20. 2,44,000. So total sources how much? 2,97,000, but total applications only 2,44,000. That is total inflow 297, total outflow 244. What is the difference? 53,000. This amount is called increase in working capital. Look at the first calculation. See the schedule of changes in working capital. The final answer is increase in working capital 53,000. No, the same answer you will be getting while you prepare the fund flow statement. In fund flow statement, the final answer is 53,000. Increase in working capital, that is total inflow minus total outflow is equal to increase in working capital. If we get negative value means decrease in working capital. Thank you.